The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent edition, a special edition of the Power Trading Hour, as the power cable has been pulled on the NASDAQ. Yes, volume has ceased to exist on pretty much all the broad markets, especially the NASDAQ, where it has been zero. But what do we know right now? And that is the SIP, which is the system that connects all the electronic commerce networks that trade at NASDAQ stocks. There needs to be a central market that actually has the best price for a buy or a sell. And then, of course, all the ECNs have to compete for that business. When there is no central clearinghouse for the best buy and sell, basically what you have is 22 fiefdoms, 22 different ECNs where NASDAQ stocks can be traded. And, of course, that doesn't work very well because all you're going to do is get the best price, which may be on some of these smaller ECNs, several dollars away from what should be a 10-cent or a 5-cent spread, and sometimes even a penny spread. So we'll be looking at that. Now, the question is what caused it? And one of the things, the only thing that really happened before everything blew up at the NASDAQ was that in a matter of about 1 minute, a huge order came in on the sell side for Apple. It went from 502 and change to $498.50. Now, the question is, especially the volume was very light when Apple started to move, and the question is whether or not the volume has gotten light enough that the high-frequency traders killed the system with huge amounts of orders with absolutely nothing else happening on the other side other than Apple. And that actually, you would think that on high-volume days, the system would be stretched and stressed the most. But we actually may have a counter example here where there was little or no activity in trading, and a huge amounts of quotes came in and actually swamped the system because nothing was going out the other end. At least normally during a trading day, stock will go up 10 cents, down 10 cents, whatever. And as it does it, those quotes become basically they expire. In fact, a lot of the high-frequency traders have good till cancel in the orders of a millisecond after those orders are put in. And the thought now is that those orders just didn't expire, or someone put in orders that didn't expire or couldn't cancel those orders on Apple, and that the system basically filled up and crashed. And that's at least the working theory that people I have contacted in there. The one authority on why this happened is a company called Nanex. Now, of course, previous to this hour, we've got our friend that trades with Nadex, which is another company. Nanex is a company that saves every bit of data from every quote, whether executed or not, from every transaction and the length of the transaction. These guys every day save terabytes worth of data of what happened intraday, and the only ones that I know of that can go back and pull a market apart from the other side, that is not being on the inside. When it crashed, you may not have a full picture of it, but they at least had what was going on and the quotes coming back. And you can imagine just how much data that is. I think we started weeks, maybe a month before the flash crash. It was like March or April, and one of my first shows. And we had Eric Hunsetter from Nadex on the show, and he explained exactly why the systems crashed. Of course, our government officials got mired in it and decided that they knew exactly why it crashed when none of the facts that Nadex published had basically they kind of just looked the other way and said this is the reason why. Of course, when you get politicians who don't know their asked from a keyboard, that's exactly probably why we are continuing to have issues. But that is a wrap-up at the moment. That is, the last I heard just before we went on the air, that the earliest that it would open back up would be 3 o'clock, and that they're going to have a 5-minute session so that you can go in and close your orders before the market reopens. I would recommend that you do that because there's probably going to be a very thin market, if you can imagine, even thinner than it was when it blew up right after noon on Eastern time. And the question is, why does this happen? They've got all the money in the world. And the answer is the NASDAQ is a affiliation of many computer systems. They're written in different software. They're running on different hardware. And they all have to work well together. And, of course, all these people are always looking for an edge over everyone else. So sometimes they're more than willing to leave some code out of their software that makes them just a little faster, but would make it a little safer. And it's kind of like a gun without a safety. And unfortunately, I suspect that a lot of the problems that NASDAQ has had with like the IPO rollout of Facebook was caused by that. They are trying to keep their systems lean and mean, but at that same time, they are extremely brittle, and you better not drop them or they will shatter like a glass. And anyway, the last I heard was that 3 o'clock would be the earliest we start trading. Now, a lot of people were blowhards were on CNBC and some of the other business channels saying, well, you could certainly trade at the New York Stock Exchange. The fallacy in that is that a ton of the volume that happens every day is now linked to ETFs. So what do you have if you can't make a basket of stocks in that ETF? Well, say it's got Apple in it. That's on the NASDAQ. If it's a tech ETF, well, you can probably suggest that that's not on at all. If it is a, let's say it's got an ETF has 9 New York Stock Exchange stocks and 1 NASDAQ stock in it. What do you do then? And you can start seeing the problems of how to reconstruct something once it's like trying to put the egg back together after you've dropped it. Very, very hard to do. And, of course, they're all trying to fix this problem. Why the phones are nonstop ringing, and the boss is down there leaning over the technician who's trying to figure out why it happened. And basically they've got to get all their data, reboot the machines, make sure that all the orders were in from the previous part of the day and haven't been accidentally canceled. And all those things take a lot of time. I go back to that Facebook issue. Remember they said that they would be trading. Then they tried to open it up, and it blew up yet again. And it wasn't until the next day that they could actually open it. I suspect we may be in one of those positions, although the SEC is talking about keeping the market open after the 4 o'clock closing bell as necessary to get the 6.5 hours of trading in every day that they talk about. Is that right? Yeah. 6.5 hours. Seems longer, doesn't it, than 6.5 hours? Anyway, I was actually thinking about doing an entire different show today, but events have changed. But certainly we'll get back to this. You can give me a call at 877-927-6648. That's 877-927-6648, and we will talk to you on the line. Probably a great day to do that. One of the things that we've been doing, probably have it out later today or tomorrow, and that is I made a small change to the art of timing the trade charts. And why this is not something I'll do every day. Spent about 8 hours going through stocks that had confluence, and we're going to get a report out for those people that subscribe to the art of timing the trade charts with a lot of these confluence levels in them, so people can gain experience in trading them. I've been talking on this show a great deal about the Apple confluence, and actually in the webinar we did for the art of timing the trade charts, I talked about this one for, 5 or 10 minutes, just because it looked so good and what looked very much like we were going to have what we were hoping for. And that was that this thing had the top of confluence at $514.56. It got to $513.74, so about 80 cents, 75 cents, 76 cents. Within the top of the projection for Confluence. And in fact, Confluence was only about $7 in this $500 stock. As we talk about Confluence, for those people that are new, it is where two different Fibonacci sequences and retracements line up together with the largest retracement versus the smallest retracement of the other. So on one of them, we're looking at the 618. On the next one, we're looking at the 382 retracement. And normally what you're going to find out is that they are just like this. And you really like it when you get multiple things setting up. In the case of Apple, this was the top of a gap down. And you had that, and the odds were extremely good that this thing would top out right here. Now, the gap actually for that went up to $520. So if you were just betting on a gap fill, you would have had to wait for $520. This came in right at about 75 cents. Shows how deadly accurate this can be in a lot of trades. So, be looking at that. Anyway, I will be checking into the den. Yep. So, okay. Anyway, we're going to look at a few of these other charts and what I do like and what I don't like about Confluence. And when we come back, again, you can give me a call. We'll talk about your stock. 877-927-6648. That's 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, news just crossing the wire now is that we will be trading again on NASDAQ stocks at 2:45. Unclear if that's exactly when they're going to start taking orders. And 5 minutes later actually starting trading, or if they're going to start taking orders at 2:40, but we'll probably get that cleared up here in a few minutes. We've got Jason from Hawaii. How you doing today, Jason?
Good morning. I'm still stuck in traffic right now. So I listened to your show. I probably give you a call.
Okay. Good enough. So you're looking between two stocks. You're looking at BEAV, which is an aerospace company, and Viropharma, which is, of course, a pharmaceutical company. So what are you thinking about doing, going along these?
Going long for both, yes.
Okay. Chart-wise, Viropharma looks better. It's come down to Confluence. Hopefully when you get home tonight, you can watch the replay on Channel 14 of Tiger TV and see this. But the bottom of Confluence on this was $30.33, and this thing came right into it and has gone sideways. You'd want to put your stop just on the downside of it, probably anything. Well, anyway, any close below 29.62 would have you out of this stock. I dislike that it came down with high volume on the first, and couldn't recommend that trade. BEAV is the other one.
Yeah.
And
BAV.
yeah, and These confluent zones are coming in everywhere. This one actually had higher energy up on the last move. You'd probably want to be in this thing somewhere around, what are we going to be talking about? 60 to 67.10. So somewhere probably about $66 is going to be the middle part of confluence, and where you're going to get your first opportunity to buy this. Your stop would probably be a close below $65.60. At least it looks better on this. Beeve Aerospace looks much better than the Biopharma. But who knows? They could come out and cure cancer tomorrow, go to the moon, or they could fail and be zero. So I just don't like that trade. The chart doesn't look good, and this one does look a little bit better. But you want to be down probably in the $66 range. And if it goes below 60 and closes below it, you'd be out of it. So you got a little farther to come back, another $3-4.
Oh, yeah. I'm just looking at the 50 days simple moving average.
Yep.
Kind of dangling around there the past week or so. So call me back. Just it's 50-50.
Yep.
Then you cannot lose.
Yeah,
so thank you very much for your analysis. Always like your show and value your opinions.
Okay. We're going to go. Thanks for the call, Jason. We're going to go to Jim in Fort Lauderdale. How are you doing today, Jim?
Hi, Dave. Very good, thank you. And yourself?
Another day in paradise, albeit a wet paradise. It's been, I think we've been on Moses. It feels like 40 days and 40 nights down here of rain. Actually, it's been about 50 every single day. Anyway, what are we looking at here in the SPYs?
I'd like to know, based on your charts, what do you see the price action potential for SPY for the rest of the afternoon and tomorrow?
I thought we were going to gap down today. We kind of bounced and we had a lot of volume in the first 30 minutes, and then everything went very, very light. And, normally traders don't like this kind of instability. The markets are fairly light. The big question is going to be how these stocks open back up. Now, the big problem that we had where this thing blew up was Apple dropped, $4 or $5 in a matter of 30 seconds or a minute, and whether or not there's any news behind that's been kind of covered up. Normally you don't get that kind of move that quickly without something else going on. So that would still be kind of we'll find out how Apple opens. Probably going to tell us how the rest of the market trades, because this is the only thing I can find that was moving when the NASDAQ blew up. I think we're headed back down to these gaps on the SPYs at 160. Okay. All the options are saying that they want to expire this market somewhere around 162 on the SPYs in September or lower. So no end of the world, but I think that we've got two major gaps out here, and I think that both those gaps could get filled and take us back down to at least the gap fills would take us back down to 157 on the SPYs. I don't think that would be a whole lot. In fact, it's not the end of the world on the markets or anything. That would be kind of just a normal pullback. We had a higher high in the SPYs with an extremely lighter volume. Oh, we're going to break. If you want to hang on, I'll continue talking about this after the break. But, there was a severe change in volume at the highs.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And hopefully we still have Jim on from Fort Lauderdale, or as I know a lot of people call it, Lauderdale.
Yes.
So anyway, you've got a clear sign of a top out here. You had the last major high on May 22nd with 240 million shares. It went through it with 140 million shares on August 2nd. It's closed below it. If you can't break out the top, you're going to try to go break out the bottom, and that's at 155.73. Now, can it consolidate or congest out here for a while and then come back down? But I think we've got two nice gaps out here, and that's probably going to be where this thing comes out. But neither of those gaps had a lot of volume, so I think you could certainly come back in it. In fact, what do we have here? The 134 million and 162 million. So yeah, I mean, it kind of started coming up on two light gaps and went sideways for a while and went up here to the high. But the energy, let's try that. Hang on, let me try to get it. The energy was about the same from the last leg down to the last leg up to that 170.97 high. The energy was about the same. So I don't see a whole lot other than the fact the last 5-6 trading days as it broke through that high just had nothing in volume. So more likely we're in a bigger trading range down to that 155.73 on the SPYs. And at least the people in options If were listening to my show, the thing pretty much expired exactly where options were pointing that they were, and options are pointing in September to 162. So, would that be, this may be one of those real long paper cut kind of markets. The thing just pulls back every day a little bit more, 5, 10 S&P points till it gets back down to those lows.
Okay.
So
on my charts, I got the SPY channel, bottom of the channel running from October low of 2011 through the low of November of 2012, and then continuing on. And I was wondering if you think that it could actually get down to the bottom of that channel this year, which is right now it's at about 153 and a half.
I think it could get back down to 145. Just depends on how. Yeah, by the end of the year, I don't think that would be a stretch. The question is how the market reacts to the pulling out of quantitative easing, and I don't think anybody knows because it's never been done before.
I see.
So I know that the market's going to get weaker as they pull money out. We're seeing financial stress across the markets. Today, they had to drop the size of the issuance of the 2-year treasuries, the first time they've done that in 3 years. So the question is whether there's an appetite to continue to buy treasuries in the Asian continent. Right now, we're saying is no. And now, are we going to get some nice bounces? My guess is that the Fed knows that they've created a bubble in the equity markets, and they want to slowly let the air out. So one day they're going to say they're going to cut, the next day they're not. The next day they're going to say they're going to cut, the next day they're not. Then instead of buying $80 billion, they're going to say that they're going to buy $79 billion, and then $78.5 billion, then $78.25 billion. And they're just going to continue nickel and diming the market back down. But that's my thought at the moment. They want to just let the air out as slowly as possible. So
great. I'd like a slow drop, not a flash crash of 100 S&P points.
Yeah, I mean, we've got very light volume. There's nothing to indicate that they won't continue to taper. But a great deal of what we had is the Dow stocks that had have a huge, or a lot of them have big dividends. And, you could, if you've watched TV long enough, you can see the ads for interactive brokers where they're giving you, charging you 1.5%. And if you have $250,000, they'll let you buy $1 million worth of stock. I mean, that kind of leverage has to come out of the system. And I think everybody at the Fed knows that if they pull the trigger too quick, they can cause everybody a stampede to the exits. But they are, at this point, starting to look at what it's going to take to let the air out of this balloon a little bit. And I suspect that 162 wouldn't be a big deal for September expiration. So at the moment, that's all I have. What I can tell you, are you watching on Tiger TV?
Yes.
What I can tell you is the energy that came off this top. We're only about probably 3/8 back down to that 155, and the energy already is already an 11 compared to the 16 before it. We have significant energy off this top already. So it's not going to be a big deal to me to see us go back at least to that 155.73 low, probably go out and test it in that area. So to me, I think we could see a nice slow sell-off all the way into the year. I don't think that would be uncommon. And I think the only reason it's going to be slow is the Fed's going to throw up roadblocks all along the way. They don't want a huge move in the VIX to basically start forcing selling on a huge level. They want this thing to be a frog-boiling market. You know what that is?
Yes.
Okay. Yeah.
So you do realize that what you're saying is contradictory to the talking heads on TV, of course. But
it's just my clue. But at least the charts are saying the energy already off the top is significant.
Yeah,
and so So to me, that's not a big deal. That we're in August and the thing, the market has still kind of come down, tells me that I think a lot more, and certainly the people that are buying options, the big guys that are buying options, not Ma and Pa Kettle, have been setting up for September for 162, and I haven't seen any change in that whatsoever. So no crash predictions out here, but if we did have a major event out here, this could get wild very quick, in which case the Fed will come out and say QE forever. They'll do a little Jim Dandy song and sing and dance. But I think when we find out who the next Fed president's going to be, it's going to be whoever promises the current administration to have as easy money policies as possible. Once they get in there, they may turn their back on that. But I think right now the Fed is worried about the bubble in a lot of these markets that they've created. So I think that to them right now, they want to get out of that problem where if we did have another 9/11 or the Arab Gulf starts burning in bigger flames, that they won't have that sudden crash. And that's what the Fed's all about. They really try to just keep the market moving as slowly as possible, so that there are no major surprises. So, and let people kind of in and out, but they don't want rapid movements in markets, and I think that's the only thing that they're doing here now is jawboning this market, but making sure that the air comes out of the balloon as slowly as possible.
Fantastic. Well, thank you very much for your analysis, and your show is great.
Thank you very much. And you can always give me a call at 877-927-6648, and we'll take a look at it. Anyway, we got the market supposedly going to start trading up here in a few minutes, so we're probably going to have some action in these markets. And, of course, I had been basically setting up a show about Confluence all day. And one of the things I remember was there was a caller that did call in about Vail some time ago, and I was talking to him about confluence levels. And I wanted to bring this one up because it is an excellent example of one that has worked before, and I suspect it's making an ABC down, and this is Vail, V-A-L-E. You know what it was? It wasn't a guy. It was a guy at the dog park that was telling me he had Vail. I said, well, the thing's topped out. That was this last Sunday. Wasn't a caller. But it kind of made a little ABC up. Now I suspect it's making that same ABC down. But when you look at this, it's very nice, very clean setup. And that is you had Confluence at 1568 to 1602, got to 1690 right in the middle of it, filled a gap, which is something that happens a great deal in these when you get them set up, and especially when you get the confluence level to match those gaps, especially if it came on a decent or significant volume. But I was going through a ton of them today, and I think we've got about 40 of them going out in that special letter to the Art of Timing the Trade Charts subscribers. Hopefully today, maybe tomorrow. But this is going to be these all setting up that they haven't already actually started. This is just one I included to show you how they do work fairly well and how close that they come to predicting good prices like Apple. But Vail is very nice. This thing looks like it's probably headed back down to test $12.39 once again out here. But of course, what you want to do is have two Fibonacci moves. Let me back this up a little bit. And you actually had Vail make its big high out here on January 2nd this year, like a lot of these stocks. And, of course, then you have the next major move, which is the May 9th high at 1772. And if you figure out the Fibonacci's for both, and the 618 of the lower one to the 382 of the higher one gives you that very tight trading range that sets up what's known as a confluence. And these things are deadly accurate when you get them over time, like this one started January 2nd, didn't start 5 days ago. You want these things to develop over time. You want them to make nice, clean ABC movements that are in line and not horribly wild movements all the way down. And you had a nice kind of little ABC up here to the top. It hit right on the numbers, and now it's rolling back down the other side. But this is a good example if you are at home and you've read Tom's book of the art of timing the trade, his new book, to go through those confluence numbers and see how they do set up. I'm trying to remember, there was another one out here that was a good example. Another thing on these confluence levels, now I see full trading to resume at 3:10. Okay, so it'll be after this show. What else do we have? And that is, a lot of times you're going to have multiple levels of confluence, and what you're looking for is the one that's the thinnest over the longest time, and that's normally the one you want to pick. And when we're looking at Marvel technology, this is a good example for that. Boy, this thing is so thin, you're probably not going to see it on Tiger TV because this is tiny. But there are two confluence levels. I'm showing you one at $11.01. There's a one that's a little tighter in. And what happens as these confluence levels get wider and wider in price spread is they become more of a resistance, like a consolidation or a congestion zone. They aren't hard, fast resistance. There's a pretty good indication that this thing, when it gets back down to 1101, probably going to hit that thing and bounce right off that number. This thing's only a penny for the Fibonacci retracements based off the December 27th low of last year and the April 18th low of this year. And if you go back and figure between those two, you're going to see it's a 1 cent move in that, and those are rare, but they are also deadly accurate at predicting where support's coming in. So I suspect that as this thing like Marvel, if it comes back down, it's going to probably see it bounce around a little bit just under that $12 range, and then you're going to see a move rather briskly down to 1101, 1102 area, and that's where that thing's going to find massive support. So, if you are playing the long side, you always want to look at where confluence is on the downside too, to kind of figure out where your risk reward is on these stocks. But a excellent example. Another one kind of like this that's in an uptrend and the energy's been good has been Krispy Kreme. And when we look at this, same kind of thing. Now, this one's a little different in that I wanted to show the opposite, and that is the larger retracement and confluence ranges is actually bigger on the longer term, and actually the shorter term out here is going to show a very, very tight confluence range from $18 and 90 cents to $19.11. And that's another good one to put on your calendar. Watch how these things come back. When you look over on the left side part of the chart, you're going to see a congestion zone right around that same level. A good indication that that's where your support level is going to come in. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, we had a question in the den. Someone IM'd me, private messaged me about how to make a stock list. So I'm going to do one real quick one, just the last few minutes we have, and go through it. Now, I wanted to go through the large cap gainers and losers out here, and so probably the easiest thing to do is just go show you. If you click on the little icon for the folder with a plus on it, it says create a new stock list. I can actually click on the first tab that says a blank list. It's going to ask me for the name of that list. I'm going to say today's movers. Okay, and then I've got a blank list here. Now there's a little lock here, and if I undo this every time I type a new one in, it's not going to automatically redraw it. So I'm just going to click that for just a second, and if you're probably not watching it on Tiger TV, you'll see that it's actually unlocked. So I have several stocks. The first one's ING. I just click in that box that says enter ticker, YHOO, Yahoo, TSLA, and HPQ, and LTD, and what else do we have? Oh, TGT. Okay, there's all the big cap movers for today. I'm going to unclick the lock, so now when I click on any of these titles, they're automatically going to move. First one is HPQ. Of course, they came down. We're holding up pretty good through earnings last night. But Meg Whitman basically said that next year was going to be horrible, and it's down about 12%. It's back into this gap, and excuse me here. It's back into this gap, and so far the volume is lighter, but maybe they're just lucky today. My guess is at least a full fill of this gap, and that is right back down to just a little bit above 21. ING upgraded at Morgan Stanley. This thing did pop right back up to the top. Volume is going to probably be too light, though. Needed 3.2 million shares, and you got about, actually you do have 3.2 million shares. So ING, the financial, not looking too bad. LTD. Beat on the street by 1 cent, reported in line, rolling back over, actually filled a gap somewhat today, but I suspect it's going to continue to fill this gap. This is Limited Brands, the women's apparel company, and it's been around forever. I remember being 16 and walking through the malls and seeing the Limited. It's been around forever. Other stocks, Target, of course, it is continuing its down move, and all the big retailers are saying that a few big ticket items are selling, but for the most part, the consumer is cutting back. We've come back and filled this gap that had 12.3 million shares on the 3rd of March this year. And actually, volume is not all that exciting. So this thing probably is going to find some kind of bottom right around this level, at least over the next few days, maybe bounce, and then maybe set up a next move down if things in the general market don't work out. Tesla, of course, they continue to bang the drum slowly on their winning of the safest car in the world, and kudos to them. They are coming back up into this high on August 8th that had 27 million shares. They got 7 million shares, so this thing looks like it's getting awful close to topping out. And we got Yahoo. Not a lot in that now today. Anyway, we will be back tomorrow when hopefully the NASDAQ is back up and running, and we will see you then. Same bat channel, same bat time in studio, so you'll be able to see my smiling face. See you then.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.